Okay, let's start with a big idea. What if money wasn't something created by banks, but something you earn directly, just through your actions online? Well, today we're going to break down a source text that makes that exact claim, and it puts a cryptocurrency called the Pi Network right at the center of a potential new financial world.
And right off the bat, the source material just wow! It comes out swinging with this statement. It's not just hinting at a little change, it's flat out declaring the end of an entire era. It's envisioning a new economy, one driven by contribution. So that's the multi-billion-dollar question, right? A claim that massive needs a pretty solid explanation. So let's really dig into the source material and see if we can understand the how, the actual mechanics behind this pretty bold prediction.
According to the source, the whole thing starts with a totally new way of thinking about value itself. Like, what actually gives a digital currency its worth? The idea here is to move away from all the speculation and hype and shift towards something way more tangible. And this brings us to a really core distinction. The source argues that most crypto gets its value from pure market hype, which, as we know, can be an incredibly volatile foundation. The argument here is that Pi is built differently. Its value is supposed to come directly from the proven, verifiable contributions of the people actually using it.
So what does effort or contribution even mean in this context? Well, it's not some vague concept. We're talking about real, simple actions. Things like tapping a button on the app every day, inviting your friends to join, helping to run a node, or just being a positive force in the community. The key is, every time you do one of these things, you're generating Pi coins. It's a direct digital link from your real input to the creation of currency.
Now, this isn't just about a new coin. The source makes it really clear that we're talking about a complete ecosystem here, and it's built on three key pillars that all have to work together to make this new financial model a reality.
All right, pillar number one is the Pi network itself. This is the currency, the digital asset you actually get. So you do one of those verifiable actions we just talked about, and boom, you're in Pi. It's the fuel that makes the whole engine run.
The second piece is something the source calls the GodHead Nexus. You can think of this as the system's automated referee or its fact checker. Its entire job is to use smart contracts to, and I quote, purify contributions. Basically, it proves that every action is legit, that it's a real person doing a real thing, not some bot trying to game the system. This is the trust layer. And the third and final piece is the Pi Nexus ABN. Now this one's a big deal because it's meant to be the crucial bridge to the traditional financial world. This is the institutional backbone, the part designed so that major players, think the World Bank or the IMF, could theoretically plug in and use this asset for global settlements.
So you can see how it all fits together, right? It's a pretty clear flow. A user makes a contribution. The GodHead Nexus automatically verifies it's real. And then the Pi Nexus ABN provides the pathway for it to be recognized as a valid financial asset by major institutions. It's a journey from individual effort all the way up to global recognition.
Okay, so we have this three-part system in place. The next logical question is, how does all of that lead to what the source is calling a new global standard? This is where we kind of zoom out and the bigger picture starts coming into focus.
The source argues that this system sets off a kind of domino effect. First, by giving people direct access to verified assets, it could make traditional banks less necessary. Second, because the value is based on contribution, it becomes intrinsic, not just speculative. That leads to the third point. The automated verification is designed to build global trust. And finally, using smart contracts to run the whole show cuts out the middlemen and could seriously reduce systemic risk.
So when you boil it all down, this is the core argument. The source is claiming that this unique combination of user contribution, automatic verification, and an institutional bridge creates an entirely new type of financial infrastructure, one built on verifiable effort, not just on ownership.
And all of this, the contribution model, the three-part system, this grand global vision, it all builds to one ultimate provocative question. The source material doesn't just explain its system, it ends with a direct challenge to the reader. And that quote right there just perfectly captures the incredible confidence of this vision. The source isn't asking if this can happen, it's asking how fast. And it leaves all of us to think about not just the claims themselves, but what a financial world truly built on verifiable human effort would actually mean for us.